HMRC is cracking down on all the side hustle.
The government has announced a side hustle tax clampdown.
Now, if you earn money from something that is not your main job, it's increasingly referred to as a side hustle.
In financial year 2024 and 2025, HMRC is asking all app-based companies like eBay, Amazon, Shopify, Uber Eats, Amazon Flex, Uber, all of them to actually report the data directly to HMRC. They will know how much money you guys are making, so you won't be able to hide the tax anymore. So in this video, I'm gonna explain you how this is going to impact you if you are one of them. I'm gonna explain what you can do moving forward from now on and how this tax code, because a lot of people make it seem so complicated, like you have to be some like a qualified accountant to understand all that. It's not that complicated and it is very easy to understand, and in this video I'm gonna explain you each and everything. So let's get started. So whenever you are working, either you are a self-employed person or you are a employee. Employee mean you are working for a company, they pay you a salary, you receive that money inside your bank account, and you also get a pay slip as well. In this case, when you receive the money inside your bank account, if you look at your pay slip, the income tax and national insurance number is already deducted from it. So as an employee, it is not your responsibility to file for taxation, all that kind of stuff as well. It is your employer responsibility that before they send you the money, they will actually take out the income tax and take out the national insurance number, give that to HMRC, and the remaining money you will get inside your bank account. The second thing is self-employment. Self-employment is something like you're selling on eBay, you're selling on Amazon, you are drop shipping, Shopify, maybe Uber Eats, Amazon Flex, all that kind of stuff falls under self-employment. Yes, they do pay you, they send you the money inside your bank account, but they do not give you a pay slip. So you are responsible to do your own submission. You are the one who need to inform HMRC, like, this is how much money I'm taking from this company and I will be paying tax for it. So if you are a self-employed person, you will get two different options. Either you can be a sole trader or you can be a limited company. I will explain the difference between both of them, and then I will also explain which option is best for who, and also which one is more tax effective as well, because it completely depends on your personal circumstances. There is no right and wrong in between both of them. So first of all, let's discuss being a sole trader. Once you're a sole trader, it's very simple. All you have to do is get UTR number. It's called unique tax reference number. You will call HMRC and get UTR number. They will send you by post. So HMRC will know that you are also earning money through self-employment as well. UTR number is different from your national insurance number. So once HMRC will issue you a UTR number, before the financial year will end, they will send you a letter and they will ask you that you do need to file your taxes as well. Now you might ask, what are taxes going to be once you are a sole trader? So before I go into it, the one term that you will have to understand is called financial year. Financial year is different from a common year. Now we are in 2024, which obviously started in January and it's gonna end in December. Financial year doesn't start from January. Financial year start from April. So financial year 2024 and 2025 is going to be starting from the 6th of April 2024, and it's gonna end on 5th of April 2025. So any money that you're gonna earn throughout this period, you need to tell that to HMRC before 31st January 2026. So your tax is not deducted like as you earn. You earn the money throughout the year, and then you have almost, I would say, 8 months to tell HMRC, like, this is how much you made in this financial year period of time. I'm recording this video in January 24. Today is 24. So we are still in financial year 2023 and 2024. 2024. So that any money someone is making from 6th of January 2023 up until 5th of January 2024, they will have to report that to HMRC before 31st of January 2025. So this is the way it normally works. How much tax is going to be? This is the main question. So another one that you will have to understand, it is not complicated, but obviously there are few terms that you will have to understand. Everybody will have a personal allowance. The personal allowance is something, if you are making up to £12,570, you will not have any income tax in this case. So the personal allowance is 12,570. What do I mean by that? I will give you some example. So for example, let's say you made £20,000 in terms of your sales, or you got money from Uber, which was £20,000. Out of that money, you haven't deducted your fuel expenses, you haven't deducted maybe your postage expenses, you haven't deducted your stock expenses as well. If you deduct that, let's say that was £10,000. What will be left over? You have £10,000 in terms of profit. That £10,000 is under income tax threshold. That falls inside your personal allowance. So you will not have any tax in this case as well. So if you go over 12,571 up until 50,270, the income tax is going to be 20%. And the higher rate you can see all here on a website. I will put the link for that inside the description as well. So you earn the money throughout the year and you get a figure which is not your profit. Obviously, you do need to deduct your expenses. And once you deduct your expenses, whatever the money is going to be left over, you will actually pay the tax out of it on that money. So the second option, if you are a self-employed person, is going for a limited company. I love limited companies for a couple of reasons. First of all, they are very tax effective. I will explain you how they become very tax effective. And the second thing, that limited company is a separate entity. Keep in mind, once you're a sole trader, you don't need to open a separate bank account. I recommend using a separate account which you're not using like regularly, so the things will stay simple, but you can use your personal account as well. You don't need to open a business account as a sole trader. You can use a Monzo, Starling, Barclays, whatever. It will be under your personal name. But limited company considered as a separate entity. So limited company need to have its own bank account which will be under limited company name. That money doesn't belong to you yet unless you pay yourself maybe a salary or dividends or share or whatever. That money belongs to a limited company. Now the major difference between a limited company, it's easier to sell a business if you're a limited company. So if you're somebody who is starting an e-commerce business, you want to scale it down the line, maybe as an exit plan, you want to sell a business, it's easier for a limited company to sell a business. The second biggest benefit is limited company can become a bit more tax effective and they are more easy to scale. Let's say you need to hire people, you need to pay them, you need to run a payroll, all that kind of stuff as well. And the third thing which I really like as well, I would say all three of these benefits are equally beneficial for me, that you don't have a liabilities on yourself. Limited company is a separate entity. Let's say you have taken out a loan or you have maybe, God forbid, something happen, then nobody can come after you as a person. Limited company are separate from you. So you have less liabilities on yourself. So these are three major things which you don't have as a sole trader. Limited company are better options once you are dealing with good. Now let's talk about how the tax is going to work if you're a limited company. Limited company doesn't pay income tax. Limited company doesn't pay national insurance number. If you're a limited company, you will pay corporation tax. So the corporation tax is somewhere between 20% to 25%. Now give me, I like to give examples to make your life really easy. Let's say you have £20,000 inside your limited company. So we as a limited company director, what we do, we pay as salary every single month out of that limited company. But we pay that salary under the income tax threshold. So I will pay myself maybe less than 12,570. This is the way I have taken taken out 12,570 out of the limited company without having to pay any tax. So that money is out of a limited company. Now you can, as a director, you can pay yourself as a dividend as well. So dividend amount which will be tax free is £2,000. You can pay up to £2,000, which I think nowadays is 1,000, but whatever will be the right figure, I will put it right here. I don't know on the top of my head. So you have another money that you have taken out of the limited company. Now obviously you need to deduct your expenses as well. So when you deduct your expenses, then there isn't much money left over, so you might pay a very small amount, or you might not pay any tax. It really depends on your revenue at the end of the day. But there is a lot can be done once you are a limited company. For example, you can have an employee, you can pay them under the income tax threshold as well. Someone who is helping you out in your businesses can be maybe your brother, maybe your wife, maybe your cousin, maybe another regular employee as well. That is also a deductible expense. That a lot of that can be done. If you're somebody who is looking to start an e-commerce business, then I will put the link for Osome inside the description. They can help you with the taxation, and they can help you with registering a limited company. They're only going to charge you, I think it's £12, and that's what you're going to pay if you register it yourself. So why not let them do it for you? So other thing that we need to keep in mind is a VAT. VAT is a value added tax. So this is another one. I know this topic might be boring, but as a business, if you don't understand these things, then you are just simply not a good businessman, I would say. So VAT is a value added tax. VAT only applies to the business who have a turnover of over £85,000 within rolling 1 year. So let's say in 1 month your turnover is £10,000. Obviously within 1 year it's going to go over £85,000. So you do need to register for VAT. VAT only, a lot of people confuse this one as well. They say, I have bought something, I want to buy something from China, and then they're asking me for a VAT number, and they're asking me to pay VAT. My turnover is less than 85,000. Why should I pay VAT? Or Amazon is charging me VAT, or eBay is charging me VAT on the fee. Royal Mail is charging me VAT. Why I'm paying this VAT? Because I'm not VAT registered. They are charging you VAT as a business themselves. So let's say you sell something on eBay, and along with eBay fee, the fee that they will charge, on that fee they will charge you VAT as well. The reason for that, eBay is a business who is making over £85,000, and you as a consumer paying them VAT. Just like you go to Asda, or you go to maybe Tesco, or maybe Sainsbury's, you pay them VAT anything that you buy. You don't need to have a VAT number just to purchase something from them, because eBay, Asda, Tesco are VAT registered business, and they charge you whenever you buy something from them, because you as a consumer will pay for a VAT without having a VAT. But when you are a business, you will only charge your customer VAT once your turnover is going to be over £85,000. Something under that, you don't need to worry about it. If you will have any question, you can book a free consultation call with the Osome. I'm going to put the link for them inside the description as well, and I'm going to put one video right here which is definitely going to help you to understand the tax code better.